Dear friends, please gather around and listen to me recount the ups and downs I have witnessed, the hard-earned lessons from a financial market riddled with pitfalls, leading me to finally discover a safe haven for my assets. Like many others, I was once caught in the whirlwind of dancing numbers on the screen, believing in the promises of enormous profits from stocks and bonds. In those years, I lived in suspense and anxiety, my assets sometimes soaring, but also evaporating overnight. I tasted both the sweetness of expectation and the bitterness of losses. Then one day, looking back at the journey I had traveled, I suddenly realized that all those paper assets, no matter how glamorous, were ultimately just gambles. Their value was fragile, easily vulnerable to political and economic fluctuations, even casual tweets. Precisely at that time, around 2025, the world began to sink into a period known as stagflation. Economic growth slowed down, while the prices of everything soared relentlessly. The tariffs imposed by the United States on China and many other countries, sometimes reaching nearly 20%, drove up production costs and disrupted global supply chains. China did not sit idly by either, launching retaliatory tariffs that created difficulties for many American export industries. In another corner of the world, the flames of war and violence erupted in the Middle East, Russia, and Ukraine. Oil prices jumped above $90 a barrel, pulling food prices up by nearly 10% in just one quarter. These geopolitical instabilities not only caused suffering for innocent people but also created a widespread wave of fear throughout the financial markets. Right in the United States, the tension between the Federal Reserve and politicians, especially the sharp criticisms from a one-time president regarding interest rate policies, further exacerbated the instability. The Fed, despite trying to control inflation, which remained above 4%, faced pressure to lower interest rates to stimulate growth. In the context of a global financial market painted red, where stocks plummeted, the S&P 500 fell by 7%, the Euro Stoxx 50 by 9%, bond yields rose sharply, and the US dollar strengthened as capital sought refuge, I found peace and security in a place that seemed familiar yet was overlooked by many: gold. The price of gold, as you have seen, has surpassed all predictions, reaching $3,270 USD. This is not a random surge. It is the result of accumulated value over thousands of years of history, a testament to its ability to withstand all the vicissitudes of time. Gold is not a piece of paper that can evaporate. It is a physical, tangible asset with intrinsic value. During periods of stagflation, when the value of currency erodes, gold maintains its purchasing power. In times of political and economic uncertainty, gold becomes a safe haven, protecting assets from the fierce storms of the market. Looking back at the ups and downs, I understand that safety and sustainability are the most important things in investing. Gold, with over 2,000 years of proven value, is the most reliable companion in challenging times like these. Consider choosing gold, not just as an investment channel, but also as a way to protect your own financial future. Gold is not merely a precious metal. With a history spanning thousands of years, it has proven its role as a safe, storm shelter for assets during turbulent times. When other investment channels falter, when faith in currencies weakens, gold further affirms its enduring value. What does the fact that gold prices have surpassed strong resistance levels like $3,200 USD indicate? It shows that the buying pressure in the market remains significant, and investors' risk-averse sentiment is still prevailing. In this context, waiting for a clear peak to sell might be a risky decision. I am not saying that the price of gold will rise forever. Markets always have corrections. However, given the current macroeconomic factors, and with the experience of someone who has witnessed many cycles, I believe that gold remains a safe investment choice with long-term growth potential. Look at the reality. Experts can make predictions based on past models and data, but the future always holds surprises. Their silence after the price of gold surpassed the $3,200 USD mark is clear evidence of that. My advice remains the same. Rely on the intrinsic value and the time-tested history of gold. Do not overemphasize risky short-term predictions. In an uncertain world, gold remains the most reliable protector of assets.